Ladies and gentlemen, good day and welcome to the Capacit'e Infraprojects Limited Q3 and 9-month FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. Before we begin, a brief disclaimer. The presentation which Capacit'e Infraprojects Limited has uploaded on the stock exchange and their website, including the discussions during this call, contains or may contain certain forward-looking statements concerning Capacit'e Infraprojects Limited's business prospects and profitability, which are subject to several risks and uncertainties, and the actual result could materially differ from those in such forward-looking statements. I now hand the conference over to Mr. Rohit Katyal, Executive Director, Capacit'e. Thank you, and over to you, sir.
Good morning, everyone. On behalf of Capacit'e, I welcome everyone to the Q3 and 9-month FY24 earnings conference call of the company. Joining me on this call is Mr. Rajesh Das, CFO, Mr. Nishit Pujari, President, Accounts and Taxation, and Mr. Amit Porwal from our IR team. I hope everyone has had an opportunity to look at our results. The presentation and press release have been uploaded on the stock exchanges and our company's website. Current quarter has been a milestone quarter in the company's history as we achieved highest ever quarterly revenue and profit after tax. Over the past few years, while our order book size has expanded significantly, the projects under execution have reduced, leading to higher revenue contribution per project, better management, and improved margin profile. The overwhelming response to our 200 crores QIP depicts institutional investors' continued confidence in our business model. We are embarking towards a higher growth phase, backed by a diverse order book from distinguished clients in both public and private sector. The equity infusion and additional tie-up of non-fund-based limits from banks has improved our liquidity position significantly. This, coupled with execution ramp-up across projects, will help us further improving our working capital cycle and profitability. With the healthy order book and sustained order inflow and our documented expertise in executing and delivering projects on time, we are optimistic that we shall witness a healthy and sustainable growth. Key updates. The company achieved its highest quarterly turnover, EBIT, PBT, and profit after tax. We believe the momentum will continue. The project ramp-up has gained significant momentum, reflected partially in Q3 numbers, and shall reflect totally in Q4 of the current financial year and onwards. The order book pipeline and inquiries remain strong from both private and public sector clients across segments. We are witnessing overall positive and healthy shift towards quality contracting companies. The company has already received orders worth 1725 crores during the 9-month period ended 31st December 2023. Consolidated performance highlights for Q3 FY24. Revenue from operations stood at 481 crores compared to 443 crores in Q3 FY23. EBITDA for Q3 FY24 stood at 89 crores compared to 90 crores in Q3 FY23. EBITDA margin for Q3 FY24 was at 18.5%. EBIT for Q3 FY24 stood at 63 crores as compared to 56 crores in Q3 FY23. EBIT margin for Q3 FY24 stood at 13% as compared to 12.4% in Q3 FY23. PAT for Q3 FY24 stood at 30 crores as compared to 23 crores in Q3 FY23. PAT margin for Q3 FY24 stood at 6.1% as compared to 5.1% in Q3 FY23. Consolidated performance highlights for 9-month FY24. Revenue from operations for 9-month FY24 stood at 1,333 crores as compared to 1,352 crores in 9-month FY23. EBITDA for 9-month FY24 stood at 243 crores as compared to 275 crores in 9-month FY23. EBITDA margin for 9-month FY24 stood at 18% as compared to 20% in 9-month FY23. EBIT for 9-month FY24 stood at 163 crores compared to 167 crores in 9-month FY23. EBIT margin for 9-month FY24 is at 11.4% as compared to 12.3% in 9-month FY23. PAT for 9-month FY24 stood at 69 crores compared to 74 crores in 9-month FY23. PAT margin for 9-month FY24 stood at 5.1% as compared to 5.4% in 9-month FY23. Gross debt stood at 345 crores with gross debt to equity ratio at 0.27. Net debt stood at 190 crore with net debt to equity at 0.15x. These figures do not include the infusion from QIP which happened in the early part of January 24. The working capital cycle stood at 123 days in Q3 FY24 as compared to 152 days in Q2 FY24. We are focused towards meaningful reduction in working capital cycle during the current financial year and going forward. The company continued its focus on increasing execution across projects. Order book on standalone basis is 9670 crores as on 31st December 23. Public sector accounts for 65%, while private sector accounts for 35% of the total order book. Thank you. Now the floor is open for questions if you have.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask questions, please press star and 1. Ladies and gentlemen, to ask a question, you may press star and 1 on your touchtone telephone. The first question is from the line of Dhananjay Mishra from Sunidhi Securities. Please go ahead.
So am I audible?
Yes, you are.
So congratulations on delivering improved quarterly performance. So can you give some detail in terms of which key orders which contributed in quarterly revenue in this quarter, and also how is the billing happening in terms of monthly billing for CIDCO and collections figure at present? And thirdly, a key order which will be contributing for next financial year in terms of revenue.
So practically all the ongoing projects have contributed in this quarter. Project-wise details can be taken from our IR department, Mr. Amit. We see significant improvement in quarter 4 across projects. So there is no one single project which will stand out as contributor, while CIDCO will be the biggest contributor on volume basis. MADA has started contributing 17 to 18 crores per month, Raymond is contributing 22 crores. M3M is contributing about 13 to 14 crores. So, all projects across the company are delivering at nearly 90-95% of the projected revenues, and we expect this to continue into quarter 4, which should again be the highest revenue grossing quarter in the company's history.
So what is the annual contribution you are expecting next year for CIDCO in terms of overall revenue?
We are expecting 600 crores to 750 crores of revenue from CIDCO in the next financial year.
Okay. So monthly run rate is we have reached 50 crores something in this quarter?
Our monthly run rate is 35 crores, but it will be 50 crores from April onwards. We should be close to 45 crores in March of this financial year.
And secondly, this data number is looking on higher side because first 9 months we are kind of flattish in terms of revenue, and we are at close to 740 crore. So which project we are expecting? You are saying that this is going to improve. So from where you are expecting more collections happening?
We are expecting a collection of 500 crores cumulatively in quarter 4 of the current financial year. As we speak to you, this number has already come down significantly.
Okay. And what is the bid pipeline size for us as of now?
Over the next 5 months, we'll be bidding for projects worth 27,000 crores in the public sector. Private sector will be on invitation, and more probably will be repeat orders from existing clients.
How much you said bid pipeline number?
29,000 crores is identified. How much the company bids will depend on the order wins over the next 3 to 4 months.
Okay. And all these tenders will be finalized in next 6 to 12 months?
Yeah, these days no tenders are kept pending beyond 2 months. So that's a positive sign in the public sector. So the bidding will be more for CPWD, PWD or various states. And therefore we don't expect the bidding timeline to award timeline to be more than 2 months, whether we get it or anyone else gets it.
Okay, thank you.
Thank you.
Thank you. The next question is from Prateek Bhandari from Art Ventures. Please go ahead.
Hi, good morning. Am I audible?
Yes, please.
Yeah. So can you just do a bifurcation of your order inflow in the 9-month FY24 in terms of the current quarter, that is Q3, and what you are expecting as an order inflow in Q4?
We have given a target that 2,200 crores will be the total order inflow for the full year financial year 24. We are well on track on that. We already are L1 in one major project. Award of that should complete our yearly target. However, if you remember, last year, instead of 2,000 crore, we had an order inflow of 3,400 crore. So such thing happens in a construction company, and therefore you have to see the order booked over the last 2.5, 3 financial years, rather than looking at a quarter or a half-yearly period.
Okay.
However, answering your question, in quarter 4, we expect 2 repeat orders from existing clients. This is not a commitment, this is the indication which the client has given us, and we expect maybe 1 project to be awarded from the public sector side in Q4 current financial year.
All right. And do you have any plans to, do a QIP in the, next financial year?
I don't know, but I just mentioned we did a QIP after 6 years in January. That is more than sufficient. We have already tied up our limits with the banks, so there is no question of doing any further QIP.
Okay. And do you see the margins to be maintained in the same range, or do you see them, to be improving in the financial year 25? And what would be the revenue growth in terms of financial year 25? If you can throw some color on that.
We definitely know that 25% growth is given. Number one. Number two, the margins, not because of any input cost reduction, but because of indirect costs coming down due to increase in revenue, there definitely will be an improvement in EBIT and PAT of the company.
So what would be the range of the margins in that case?
We have always guided you for 12.5% EBIT. If there is an improvement on that, it should be appreciated.
All right. Thanks a lot.
Thank you. The next question is from the line of Shreyans Mehta from Equirus. Please go ahead.
Yeah, thanks for the opportunity. So, sir, now that the funds are in place, how do you foresee the fourth quarter playing out? And as you highlighted, probably we are targeting 25% growth in F25. So is it contingent on any further fundraise, or this much funds which we have currently will be, enough to sustain that 25% growth?
The liquidity position is more than comfortable. Will be taking care of the revenue increase not only for the next financial year but beyond that. Okay, so there is no plan of raising any further equity. I clarify, no further equity, whether pref, QIP or whatever other mode, in the foreseeable future. With the tie-up of 225 crores from State Bank of India already in place, the bank guarantee limits, about 60% have already been tied up. Remaining tie-up will be done from UBI and PNB in the current quarter itself, latest by maybe 15th of April. So even from the non-fund based requirement, we foresee that the bank guarantee requirements up to June 25 would have been tied up, which not only will ensure the growth momentum both in revenue and in order book, but also will maintain a very strong liquidity, whether in form of working capital limits or free cash on balance sheet of close to 100 crores at any given moment of time.
Sure. And sir, any idea, if you could highlight fourth quarter, what could be the run rate?
We do believe that from February onwards, the company should start grossing 200 crores of revenue, and therefore, definitely you should be close to 600 crores, if not better than that.
Got it. And on top of it, we are eyeing, so we should be closing the year at, say, closer to 1,800 odd crores and 25% growth next year.
So 1,900 plus is given, as I see it at the moment when I speak to you. 25% is 2,400, and if we do 600, there is no question why we will not do 2,400 crore next year. That's given.
Got it. Sure, sir. Secondly, sir, this quarter the margins were on a higher side, and so were there any provisional reversals or anything at the EBITDA level?
Nothing. As your revenue will increase, your indirect cost as a percentage to revenue will fall, resulting in better margin profiles.
Got it. Sure. And sir, in terms of our capex, how much have you done till 9 months and for fourth quarter, and how much for the next year?
Just give me a second.
Fourth quarter.
The fourth quarter addition has been about 6 crores. So the total addition in the full year have been lesser than 30 crore. And our target was to maintain it below 45 crores, so that we can have free cash, and that is what exactly the company is being focused on and doing.
Got it. And so any number for next year?
45 crores. If there is any change, we will intimate in the next conference call.
Sure. And sir, last question from my side. CITCO, as you highlighted, probably 600-750 odd crores for F25. What should be the number we should be looking for the Mahara project?
Mahara currently is at 16 crores plus. Two more buildings are starting at Capacit'e standalone level. That should start from April, May. Therefore, starting July, you can easily anticipate a revenue of 20 crores up till October, and from October onwards, 25 crores per month.
25 crores per month. Sure. That's it from my side. Thank you and all the best.
Thank you. The next question is from Parvez Qazi from Nuvama Group. Please go ahead.
Yeah. Hi. Good morning, and thanks for taking my question. So my first question is regarding the working capital limits that you just alluded to. So post our QIP, what is the kind of working capital limits, both fund-based and non-fund-based, that we have tied up, and what is it that we plan to, let's say, do in the near future?
The total assessed limits, excluding CIDCO and MCGM, are 113 crores as assessed by State Bank of India. Out of this, the fund-based limits have been totally tied up, and out of the remaining 400 crores gap, 225 crores has been tied up from State Bank of India as non-fund, and the remaining 175 crore will be in place in March from Punjab National Bank and UTI. The proposals are already in their respective head offices.
Okay, sure. And I mean, you did talk about that we will be able to bring our debtors levels down when all these working capital limits are in place. So let's say a year down the line, and after, let's say, posting a 25% kind of revenue growth, what is the kind of debt levels that you anticipate at, let's say, end of FY25?
You see, on the gross level, already the debt is at 310 crores as I speak to you. You are visualizing, this is apart from the 125 crores that the company carries in cash and 150 crores of fixed deposit which the company has. So as I talk to you, the net debt is not there. The net debt company is net debt free. Now, what is the company's intent to go gross debt free over the next 7-8 quarters? Now, how that will happen, since we have the guarantees in hand, before 30th June of this financial year, the company will be getting back 100 crores of its retention money. 100 crores of retention money will do two things. It will bring down the creditor levels, or it will bring down the debt level. All right? Number two, we will now be in a stronger position to claim our advances against new orders, though it will be a liability on the balance sheet, but it will definitely bring down the debt level because that money will be parked in the line of credits with the consortium member banks. So, on overall answering your question, we do see that there will be a reduction in debt, gross debt of close to 75 crores over the next 12 months, if not more. However, gross debt is a figure of the entire borrowings. We have not reduced it by the cash carried by the company in the current accounts of the company. So, answering your question, there will be meaningful reduction of 75 crores on gross level. Obviously, the company will carry free cash apart from that.
Sure. And in terms of your bid pipeline, what are the major segments, etc., where we are targeting? I mean, in terms of segments, I mean, whether these belong to hospital buildings or these are private sector office orders, what kind of orders are we talking about?
So the traction is very strong across sub-segments of the building segment. So at the moment, on the government side, Central Vista will offer opportunity for commercial buildings. CPWD, PWD are offering a lot of opportunity on the healthcare, hospital and medical colleges side. The traction in PMAY, wherein another 1 crore houses have been added by just the central government in the recent interim budget, will throw up the opportunity as well. There is strong traction for police housing. We see bids of close to 10,000 crores happening over the next 4-5 months. So answering your question, there is traction across. the company obviously will look at commercial and healthcare with more keenness, but that in no way means that we will be averse to residential projects. As you are aware that we have some of the best clientele in the private sector as well, and all of them are looking at serious growth in the coming year and the next 4-5 years. And obviously their growth will translate into our growth proportionately.
Lastly, you mentioned about being L1 in a order. So what is the size of that?
It's about 500 crores plus.
Sure. Thanks and all the best for future.
Thank you.
Thank you. The next question is from Parikshit Kandpal from HDFC. Please go ahead.
Yeah, hi, Rohit. Congratulations on a good quarter, sir. My first question is on this fundraise of 200 crores. So we have an order book of 9,670. So just wanted to understand, so pre-fundraise and post-fundraise, so what would have been the impact on execution just because of this funds being not there? So at what level of we would be under-servicing our execution on this order book, and with this ammunition now with us, so immediately what could be the recoil or on the execution to the normalized level with this funding?
So the first target is to have a run rate of 200 crores plus per month, which we are extremely hopeful of achieving from this month itself. Number one. Number two, not only the fundraise, but the tie-up of bank limits also means that we shall have our retention close to 200 crores with us starting February and ending June. Maybe we can achieve that by May itself. So these two things put together means that we are well equipped very easily in the midterm to achieve quarterly revenue of 800 crores. I am not guiding you for 800 crores. I said we are well equipped to, in the midterm, to achieve a quarterly revenue of 800 crores. So, as I speak to you, 600 crores is given. We have guided for 25% growth, and definitely we'll be trying to better that from both, because all the projects currently under execution are fully ramped up from equipment perspective, resource perspective. And whatever projects are in the initial stages of start, they will get ramped up in this quarter itself, so that next year our targeted revenue of 25% growth minimum is achieved, and that can be visible from the first quarter itself.
This 25% growth, so this midterm means what if your targeted growth? So it will be more targeted to a second half of financial year 25. So some of the quarters, maybe third quarter or fourth quarter, will start hitting between now 600 to 800.
600 will be hitting in first quarter itself.
Okay.
Second quarter, it's depending on monsoon. But we should, in all probability, do 600 in quarter 2 of the current financial year itself. Quarter 3 and quarter 4, you will see a ramp up. However, I am maintaining a 25% growth for the next financial year, which is approximately 2,400 crores plus.
Okay. Just on the ordering bits, again, I mean, we have had an atlas.
I can't hear you. What?
Just on the, is it better now? Can you hear me now?
Yeah.
Yeah. So just on the ordering bit, I mean, we have seen some of the peers like bagging a lot of orders. So we, just because of this funding not being in place, have we lost the market share, and now we are with this funding and the money is coming back from retention and all, so are we well equipped to now significantly ramp up and show inflows growth over the next 3-4 quarters and get back our market share?
You are aware that I've always maintained over the years that the revenue ramp up does not happen purely on the order book, but it happens is that you have 25 projects and can you do 15 crores revenue per project. That does not mean that if some project gives an opportunity of 50 crores per month, we will not do that. So with today the number of projects being 24, we are well poised to take another 5-6 projects. Yes, availability of bank guarantees will help significantly, and we have started bidding strongly across segments. That's number one. Number two, 4 projects which can add a revenue of, let's say, 60 crores per month. That is the first target, which obviously takes your company's revenue to 250 crores per month, if that is what you're trying to reach at. However, there has been no sluggishness in taking any order. You know that RLDA, certain smaller players came and took the projects. 4 such contractors have already abandoned the projects, and it is up for recall. Our company will participate along with other mature contracting companies. So there is no hurry. Your company's order book on standalone is 9,600 crores. So there is no need to go and pick up any order which adversely impacts your EBIT or PAT, or for that matter, cash profit. So there is enough opportunity. The bid pipeline, as I just mentioned, over the next 5 months, identified by us is 29,000 crores. There is significant opportunity to add a couple of thousand crores within this period, and at the pricing at which we and our mature peers are working at. So that is what the focus of the company is.
But say comparing in FY23 or 22, in the 9 months FY24, so I understand the bid pipeline is must have been much higher, but our participation rate or actual bids submitted, so was it like significantly down? If you can quantify how much you would have bid for 9 months FY24 versus what was available to bid?
You see that last year we had a target of 2,000 crores order inflow. We had an inflow of 3,400 crores orders. If you add 3,400 crores to the current 9-month period of 1,725 crores, that crosses 5,200 crores. So as it is on a continual basis, we are much higher than our target. In the private sector, there is no bid pipeline or bidding activity. It's always on invitation. You are aware of that. And we are looking forward to 2 more repeat orders in the current quarter. And therefore, we have not participated for any new client except what clients we already have in the current financial year, except one addition of M3M. Point number 2, in the government side, we have not participated too much in the first 9 months because we were not in a position to collect advances. Now with the bank guarantee limits being in place, we are in a position to claim advances, and therefore the bidding intensity will increase month on month starting immediately. And therefore I just mentioned that whatever bid pipeline we have identified, those will be the projects we will be bidding for in the coming 4 months.
Okay. So basically there is an upside risk to your info guidance if some of these government contracts come at your margins and you are able to convert them into wins.
Private sector continues. Government sector, we still have not recognized 3,000 crore of MADA project. So you have to keep that in mind. And MADA project at the JV level, we are executing 65 crores per month.
But this 29,000, how much will be public and private in this? Your estimate on that?
This 29,000 crore only public sector. Private sector will be repeat order basis.
Okay.
We still believe that over the next 6-7 months, how much ever we may say no, we should have at least had 1,000 crore plus from the private sector alone.
Okay, sir. Okay, sir. Thank you and wish you the best. Yeah.
Thank you very much.
Thank you. The next question is from the line of VP Rajesh from Banyan Capital Advisors. Please go ahead.
Thanks for the opportunity. Just one question. When is the bearing debt coming due? Is it this year in fiscal 25 or is it going to be the year after that? Thanks.
Can you please be a bit clear? I did not understand your question.
The debt that we had taken from bearings a few years back, I just wanted to know when does that mature? Because that was a very high interest rate that we had taken. So are we planning to prepay it, or are we going to?
It's already prepaid in November or October sometime. So there is no bearing outstanding in our books. It's prepaid 1.5 years in advance.
Oh, wonderful. Great. Thank you.
Thank you. The next question is from the line of Aditi from Flute Aura. Please go ahead.
Yeah, hi. Thanks for the opportunity. So most of my questions have been answered. I just had one small query on depreciation. So from what I can see is in the last 2 quarters, basically current and the last one, we've seen around 27 crores of depreciation expense. But quarter 3 of FY23, we had a one-off of 34. So can I assume that the depreciation will be stabilizing at these levels of 26-27 crores?
Absolutely.
Okay, that will be it. Thank you so much.
Thank you. Next question is from Subrata Sarkar from Mount Intra Finance. Please go ahead.
No, all my question has been answered. Thank you.
Okay, we'll move to the next question. Next question is from Yash Modi from Ashika Group. Please go ahead.
Yeah, good afternoon, sir. My question was with regard to the credit rating upgrade. Now that we've got the 200 crore QIP money, what is the status on the credit rating upgrade from the agencies, if you've heard from them?
So the credit rating issue was related to bank tie-up, which has happened. QIP raise is an additional bonus. The documents have been provided to the rating agency, and if they are on the job, you should hear from us very soon.
Sure, thank you. And sir, what kind of interest rate savings are we looking at from this? Because I guess you paid back some high-cost NCDs from the money raised. So what kind of interest cost saving can we look at from Q4 onwards?
On absolute level, you will see reduction in the finance cost from the next financial year. The exact quantification can be taken from our IR team.
Sure, thank you so much. That will be it.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to join the question queue. The next question is from Faisal Hawa from HG Hawa and Company. Please go ahead.
So sir, is it a right statement to make that, from here on we can actually, choose our orders, according to payment conditions of the customers, and even we can also, with our past experiences, we can also be very strict on EBITDA criteria. So, or is it not that simple?
So private sector, we have already done that across. So we have gone 100% project specific. No funds or working capital infused to project A can be shifted to project B. If some client does not pay, the project will automatically be put on hold. So that's very clear. As far as choosing the project, that is what we have been doing over the last 3 years. Else the double blow of IL&FS and COVID couldn't have been sustained. All right. So that's exactly what we are doing. We are averse to taking any project which will negatively impact our overall EBIT or PAT or cash PAT margins. And yes, we have the labor, not we. All mature clients, the order books are full, so all have the opportunity to pick and choose.
And sir, will we be committed not to, go, not committed, but most probably we will not go outside Mumbai because it's as all.
No. So that was a strategy which we had explained during COVID period, where clients had not paid us for 9 months at a stretch in private sector. Subsequently, now we are there in Gujarat, GIFT City, constructing the headquarters of IFC, International Finance Service Center. We are there in Delhi NCR. In Delhi NCR, we are already there in Noida with a 450 crore contract. And you will see the contribution from these 2 states increasing significantly over the coming quarters. It was never the intention to come back only as a Mumbai-based player. We were there present in 7 major cities, and the focus is that to grow more in these same cities, but in a more healthier manner over the next 2 to 3 years. So we are already there in three geographies, and our contribution from these geographies will continue to grow.
Sir, 2 more questions. One is that what part of our private sector order is without materials that, just on a...
Sorry?
What part of our private sector orders are without materials, where we are just on a labor base and the materials are supplied by the developer?
So about 800-900 crores worth of orders are without the value of concrete and steel.
Okay. And one more is that, just any kind of escalations and all are now built up, so we cannot be really hurt by that. Any type of escalations?
Escalations?
Yeah, like any cement prices rising or...
We are immune to that.
That would be difficult to get.
No. All our government, SIDCO is full pass-through. MADA is escalation based on steel and cement and oil and WPI. So GIFT City we have steel and cement escalation. Now MCGM we have that. So all the projects what we are executing, there is no question of picking up any project without price variation clause.
And sir, can you give me 2 steps that you have taken, now that we are, unburdened by the, finance problems? Can you give me 2 steps that we have taken to, really improve our execution, on a quarterly basis, because with so many orders, there are deadlines and plus, the market is also now awaiting very good execution from our end. So can you give 2 steps?
Sir, we have now just pressed our, the pedal of execution. And as I told you, you will see that in the current quarter itself. You have seen partially in the last quarter, we have gone to 482, and that more so is the resultant of the ramp-up from mid-November to end of December, after having prepaid the bearing debt in totality. Now with this QIP funds in place, you will see a serious ramp-up in quarter 4 of the current financial year. And that ramp-up will continue over the next financial year. And if you consider only 600 crores per quarter next year, you will be there delivering a 25% plus growth year on year. Now, we are committed towards that. That is the guidance already given. So there is nothing fancy which the company needs to do. The company has been executing projects. It has to ramp up the speed, which is already done. Number 1. Number 2, we will be overtly responsible while choosing our private sector clients. These are 2 things that the company has been doing, will continue to do, and obviously the other safeguards like keeping the debtors under control in the various government and private sector clients.
So mainly it was the finance which was really burdening us and keeping us behind. So that's been solved. So, what you're saying is you need not actually take, most of the systems were in place, but it was the finance which was bothering us.
Absolutely. If your 100 crores of retention cannot come and 100 crores of advances cannot come, then you have to grow only as per your cash flow availability. With additional cash and bank guarantees now being available, your growth has to accelerate by 25-30% minimum.
Okay. Thank you.
Thank you. The next question is from the line of Nupur Banka from Stella Asset Management. Please go ahead.
Hello. Yeah, am I audible? Good afternoon.
No, you're not audible, ma'am. I cannot hear you.
Just a second. Hello, am I audible now?
Yeah.
Yeah, good afternoon, sir. This might be a repeat question. Actually, I just wanted an update regarding our current 9 months order book and what order book do we expect closing this financial year in total?
We already have received orders worth 1,725 crores. We should close the current financial year with 2,200 crores of additional orders inflow for the current financial year.
Okay, sir. That's it. Thank you so much.
Thank you.
Thank you very much. That was the last question in queue. I would now like to hand the conference back to Mr. Rohit Katyal for closing comments.
I would like to thank once again all of you all for joining us on this call today. We hope that we have been able to answer your queries. Please feel free to reach out to our IR team for any clarifications or feedback. Thank you and see you next quarter.
Thank you very much. On behalf of Capacit'e Infraprojects Limited, that concludes this conference. Thank you for joining us, ladies and gentlemen. You may now disconnect your lines.